we have a special guest with us at the London Congress, Mr. Robert Stack. Uh, he is with Deloitte Tax. Everyone still remembers him as a person who drove United States international tax policy as the then Deputy Assistant Secretary for International Taxation at the U.S. Treasury.
Yes,
that role is going to follow you wherever you go, Mr. Stack. I cannot start without asking about the session that we had today on the challenges, the tax challenges of digitalization. And I think somewhere your successor, Chip Arter, albeit in his personal capacity, did draw a red line about where US stands on digital tax and the possible solutions, the new nexus rules, and the fact that if the unilateral actions continue and a multilateral solution is not found, the US will charge right back with the trade barriers.
Yeah. Well, let me back up. I think we always have this work. We got to take it in two buckets.
Yeah.
You know, the first bucket are the unilateral measures, such as the DSTs.
Yes.
And the U.S. government has challenged that, and as Chip did this morning, said, you know, gross basis taxes that the U.S. perceives as targeted at our companies are unacceptable to the U.S. government. Then you have to say, but the U.S. has also said, we're at the table to seek a global income tax solution.
Yeah.
And so, as you heard, I think, at the conference here, all the countries are around the table trying to come together at a solution that has two pillars. One, perhaps the need to put more income in the markets. I shouldn't have said pillars. But two, and very important for an Indian audience, taxpayers seeking greater certainty, you know, to improve the investment in climate in countries and to improve the investment climate for companies going into countries.
Let's talk a little more about the solution which was proposed. Quite interesting, exciting, and a bit complicated as well. It can't be as simple as it sounds. The residual split method or residual profit allocation solution, whereby you identify the normal profits for a group or a company, then you see what are the super profits, the excess profit or the deemed residual profit is then allocated to the market jurisdictions or jurisdictions where the users, the consumers, the market is. Mr. Stack, I did talk to Steph Van Wiegel, to Jeffrey, to Philip, Porus, everyone. It's not as simple as it sounds, right, Mr. Stack?
Well, let me say it this way. The concept of saying the debate was always about really high profits and can we come up with some formulas to isolate the high profits, the what's called excess from routine, and then take a portion of the excess and put it in the markets. So the concept is not that difficult. I think most technical tax people would tell you that the technical work for the implementation can be quite challenging. For example, it was already talked about on the panel, if I put a little more money in this market, who paid less tax if somebody's now going to pay more tax? And there's a whole series of technical issues that would need to be worked out. But the key point for all your viewers is the goal is to get a broad political solution around a broad concept and then have the OECD, through the inclusive framework, do the technical work. In other words, they're not going to lead with the technical work, they're going to lead with a broad political consensus.
Yeah, and the US Treasury representative, Chip Arter, did mention that the scoping discussions are going to be very critical. How do you scope this work? And he said that the existing international tax consensus has served well for 100 years. There is a strain over digital models and tech innovation. He also made a sentence, maybe just for for the impact. He said it's a perilous moment, in pivotal and perilous moment in international taxation, one that we haven't seen in a while.
That's right. And I think the reason for that is...
You concur?
Say that again?
Do you concur?
Oh, absolutely, right? Because we're watching the unilateral actions come down the road, and that's not good for anybody, companies or countries. And so the community's trying to come together. We're in a tough time multilaterally in a lot of places with trade battles and the like. So, I think my successor, Chip, is trying to say, look, this can be a moment of multilateral success. And everybody's at the table and fully engaged. And I should add, the U.S. business community has been fully and constructively engaged in this work as well, both at the OECD and with the U.S. Treasury.
When we talk of the scoping exercise, the challenge, as Chip Arter mentioned, to find the right scope, the allocation of residual profits. He said a little more, slightly more. He
Yeah,
said,
right.
than the normal.
That's right.
In terms of the allocation, he said isolate the cases where the current rules are breaking down, and therefore, when you do that isolation, you have only a minority of cases possibly
Yes.
that remain. All of this is the U.S. viewpoint.
Yes.
He did mention very clearly that the gross base of taxes, which is being introduced, like the DST,
Yes.
digital sales tax in so many countries, it is targeting the U.S. tech giants. It's targeting the national champions. He mentioned of U.S.
Yep.
corporates or corporations, and it is something that he almost said is unacceptable, and
right.
there will be a response. So.
But let me take that
That-
backwards. So the digital, right? Even the countries using the DSTs say we don't view this as a long-term solution. They have said this would be an interim measure until we can come together. What the U.S. is saying, even as an interim measure, that's not really an acceptable approach. Let me go to scoping, right? What Chip said this morning is, let's be practical. Let's try to focus on the types of businesses that were causing the concerns that excess profits, that the transfer pricing rules might not work well with kind of super excess profits. And if you can limit the scope of companies, it just makes it less complicated to change the rules. So I think that was the tenor of his remarks this morning.
Just to present a counter view from the developing countries like India, who say that you are exploiting a market, probably Facebook, WhatsApp, Google, some of the highest users, the consumers, the market is here. You are exploiting it. They're saying, give us our fair share.
Yes, well,
And very humbly.
very humbly. Let me make 3 points. One, at the OECD, the discussion around transfer pricing, there was never a consensus that the mere existence of a market created a right, to value. Number one. Number two, the proposal that the U.S. is putting forward does put more in the market. And so in that sense, it's a major step forward, and it puts more in the market outside the traditional transfer pricing rules. But let me add something else Chip said, which is, I think, really important for an Indian audience. Remember, the U.S. is engaging in this constructively, as is the U.S. business community, because equally important, and Richard Collier made this point, is the drive for certainty. Now, India's pretty clearly not liking to do something like mandatory binding arbitration, but clearly countries that want to benefit from the new rules will need to come to the table to say, oh, and now that we've done this, here's how a taxpayer can get greater certainty, and at least the leading proposal is binding mandatory arbitration, and perhaps it needs to be something like that, and obviously India will be a full participant in the discussions, but very important to see the two pieces of the puzzle.
But India is doing much better on MAP and APAs,
India-
and quite a bit of the credit also goes to you. You
No.
struck a great relationship with the Indian tax authorities.
I worked with Mr. Ranjan in my time.
and solved over 200 maps, I would suggest.
Our
I would think.
IRS did that, not Treasury, but Mr. Ranjan has been an outstanding leader in international tax in India, and I don't want to lose sight of the fact that India has made enormous strides over the last several years with the cases, with the bilateral APAs. So we're always working at it, but India has done really well and hopefully continue. And the next question will be creating certainty for investors in India, and certainty for taxpayers through some mechanism that will come out of this process.
My last question, Mr. Stack, is some sort of crystal ball gazing. There is a lot of global uncertainty. You have the US-China trade war, the no-deal Brexit. You have geopolitical uncertainty. Where do you see things 12 months from now? On top of it, you have the tax challenges of digitalization, which quite honestly are nowhere on the radar when it comes to all these big things.
Well, first of all, I came to London.
And then the US presidential elections.
I came to London this week thinking maybe they would make me prime minister, but that hasn't happened yet.
Do you wish?
No,
Do you
probably
wish?
not. Probably not. Look, I think the one bright spot here is the multilateral work at OECD stands out as a bright spot. I think at some point we're all going to get back to multilateral cooperation across the board because everybody realizes that's best for everyone, and that I think will ultimately include trade and tax. I will not handicap the U.S. presidential election, however.
He will not. He will not. I will not let you out on his secret, on his political affiliations. But Mr. Stack has left us with a silver lining among quite dark clouds. not in London. It's great weather here. The weather has been amazing. But Mr. Stack mentioned multilateralism when it comes from the former U.S. Deputy Assistant Secretary at the Treasury. It means we still have hope left.
And let me add, I know it's your last word, but my successor, Mr. Harder, who spoke this morning, is really in that same vein of multilateralism and cooperation. So in that sense, I'm very hopeful in the tax space. So thank you very much.
Shawshank Redemption. Hope is a good thing.
Yeah.
Maybe the best of things.
Yes.
And good things never die.
Thank you.
Thanks, Mr. Stack. Pleasure.